Vancouver home prices are falling. They're down 14% already, and the data says they could fall even further. If you own, want to buy, or are renewing soon, this matters more than the headlines are telling you. So in this video, I'm breaking down the 4 data points that show where prices could go next and what that means for your next move. By the end, you'll know exactly how to think about this downturn and how to position yourself properly. Let's go. Right now, Vancouver has seen 10 consecutive months of pricing declines. That's not a headline, that's a trend. And trends matter more than emotions. If you bought in the last 3 years, that stat probably makes your stomach tighten a bit. If you've been waiting to buy, it might make you feel hopeful. But before we hit that panic button or celebrate, we need to understand what's actually driving this market. So let's start with data point number 1, Toronto. Historically, Toronto has been the center of Canada, and historically, Toronto and Vancouver, they move in almost lockstep. So when one climbs aggressively, the other tends to follow. When one corrects, the other usually mirrors it. Toronto's fallen roughly 27% from the peak. Vancouver is sitting closer to 14%. So if history repeated perfectly, Vancouver could technically fall another 10 to 13% from where we are at today. That would bring average pricing in the Lower Mainland closer to the low 900s. Now, that's not a prediction, that's just a scenario, and the smart homeowners, they think in those scenarios. If this market dropped another 10%, would your household feel squeezed or stable? And that's the real question, because the goal, it's not to predict perfectly, it's to be positioned properly. So comment below if you think Vancouver follows Toronto on this one or we break the pattern. Now, on to data point number 2, the 1980s. During that period, detached homes dropped over 30% and condos followed suit with another 30%. Why? Because interest rates were nuts, they were double digits. There was a severe recession, borrowing costs crushed affordability. If we experience that level of economic stress today, you could see a big correction, closer to 20% from peak levels. That would bring pricing closer to the mid 800,000s. But here's the difference. Rates today, they're restrictive. They're not double digit. Employment, it's softer, but it's not collapsing. And markets adjust over time through wage growth, inflation, immigration, and policy shifts. So instead of asking, will it crash? Ask, what would need to happen for it to crash? And that shift alone, it changes how you're gonna make financial decisions. If you're getting value from this breakdown so far, hit that subscribe button because this is the kind of strategy most homeowners will never hear. Now, on to data point number 3, affordability. Vancouver's price to income ratio sits somewhere between 14 and 17 to 1. That means the cost to buy a home is 14 to 17 times the average household income. That's stretched. Historically, healthier markets sit closer to 8 to 1 or 10 to 1. If Vancouver reset to 10 to 1 tomorrow, the average pricing, it would fall significantly. We're talking closer to the high 600s. Now, does that happen overnight? No. Markets rarely rebalance through prices alone. They rebalance through time, through wages, through inflation, through immigration, increasing demand, through supply tightening, which brings us to data point number 4, employment. This is the variable that actually moves markets. During the 2008 financial crisis, unemployment jumped nearly 6%. Vancouver prices fell about 16%. So job losses create forced selling creates real estate corrections. So the variable to watch, it's not fear, it's unemployment. If unemployment spikes hard, prices are gonna feel it. If employment stays relatively stable, corrections tend to stay contained. So where are we today? We have pressure from rates, we have stretched affordability, but we also have stabilizers. Over the next decade, more than $1 trillion is expected to transfer from baby boomers to younger generations. A large portion of that money historically flows into housing, which creates a capital floor. And roughly half of Vancouver homeowners, they're mortgage free. That means no payment pressure. That limits the forced selling. Then we have the developers who are delaying projects because financing and construction costs are high right now. That reduces future supply. And real estate, it's still a supply and demand game however you look at it. So what does this actually mean for you? It means guessing the bottom, it's a losing strategy. It means over leveraging is dangerous in volatile cycles. And it means sitting still out of fear can cost you long opportunity. Now, if you're in your 30s or early 40s, you probably have 15 or 20 years left on your mortgage at a minimum. You'll likely earn a solid income, but you still feel stretched monthly. And what you really want, it's not a perfect prediction. And what you really want is not a perfect prediction, you want control. This is where strategy beats headlines. If prices fall and you're renewing soon, structure, it matters more than rate. If prices fall and you are buying, payment sustainability matters more than the headline pricing. If prices stabilize and rates eventually fall, being positioned early matters. Wealth in real estate is built by people who understand the cycles, not people who time peaks and bottoms perfectly. So here's the mindset shift. Instead of asking, will prices crash? Ask, how do I stay flexible in any outcome? That means strong cash flow. That means proper mortgage structure. That means thinking long-term instead of reacting short-term, because this market, it's not going to reward optimism. It's going to reward families who plan. If this breakdown helped you see the market differently, comment strategy below so I know. And if you want more content that helps you turn your mortgage into a wealth building tool instead of just a monthly bill, hit subscribe and watch the content. And when you're done here, check out last week's video where I explain exactly what's happening with Vancouver real estate prices.